Welcome back, everybody. Welcome back to WWTA News. Thank you for returning for another episode. Yes, you did return. And yes, I would appreciate if you hit that like button. And yes, it'd be great if you subscribed to the channel. That'd be great. Hey, look, let's get on to some information, some news, and see what's going on because another day has passed. More news and information is out there, and I'm sure you all want to know what's going on. So, without wasting any more of your time, let's just jump right in. We got a tweet from Chainlink, and it says Swift is using the Cross Chain Interoperability Protocol, CCIP, in an initial proof of concept. CCIP will enable Swift messages to instruct on chain token transfers, helping the Swift network become interoperable across all blockchain environments. Chainlink is making major moves. Um, Not financial advice because I'm not a financial advisor, but this is interesting. Swift, Chainlink, interesting. All right, let's get to some news articles. The White House may replace Yellen, that's Janet Yellen, and Dees, I don't know who Dees is, after the midterms. Treasury Secretary Janet Yellen may be leaving office after the midterm elections in November. Axios first reported without giving a specific source. The White House did not confirm that Yellen and National Economic Council Director Brian Dees are expected to leave the administration. Yellen in May cited the Terra USD collapse in support of new stablecoin legislation. However, she has generally shown restraint in public on crypto regulation guidance. Eh, do we really need her? I don't know. It's not like she's really doing anything, really. So, do we really need her? Eh, Dees, who spoke of the benefits behind working with digital asset community to mitigate risk and harness the benefits of digital assets this month, has drawn criticism as the Biden administration has stepped up enforcement efforts. Yellen, who has served as Treasury Secretary since January 2021, has not said she has any plans to leave the administration, a spokesperson said. I mean, if she's just coming in January 2021, really, I don't know. This is some old, yeah, maybe, it's to make you look one direction while something else is going on. But nonetheless, it's just a tidbit of news. Next article, British pound drops to all-time lows against the dollar. On September 16th, 1992, the British pound dropped to its all-time low. The day has since become known as Black Wednesday. Can I get it one more time? Black Wednesday. Or the day George Soros broke the Bank of England. Oh, George, what? The historically stable currency lost 4.8% of its value against the US dollar, effectively keeping the UK out of the EU's newly formed European exchange rate mechanism. The country joined the ERM in an effort to support the unification of European economies, but effectively failed to adhere to the terms of the ERM. Right, okay. Britain's inability to keep the pound stable opened the door for speculators to short the currency. George Soros, an investor and fund manager, amassed one of the largest short positions on the pound, which enabled him to pocket $1 billion. On September 26, 2022, the British pound experienced a flash crash almost as large as the one on Black Wednesday, losing 4.3% of its value against the US dollar. Look, money and economies are taking some nasty hits right now. Things are not looking good at all. I don't know if anybody's tuned in and paying attention to what's going on around them, especially in our economy, but things are really getting bad fast. All right, it says one of the main culprits behind this crash could be large traders, significant option barriers at 1.07 pounds to the dollar triggered a cascade that saw the pound drop. Yeah, so yeah, the pound currently stands at just 7 cents. Yeah, I don't know. It's just, I just say something's going on where all economies are taking a hit. And the more news articles we read, the more we're going to start to be able to unpack what's actually happening. But it's really, what I'm saying? Like, this, what else is really going on behind the scenes? All right, we got another article. It says crypto could enjoy renaissance as trust in banks fades. Right? We're talking about the euro losing value. And here in the next article, yeah, man, people aren't really trusting the banks. Why should you? Why, really? All right, it says despite the sell off, crypto has endured due to the ongoing global economic meltdown. Something's going on with the economies everywhere. Stanley Druckenmiller thinks the nascent asset class could see a revival as the macro situation worsens. Well, I mean, what did we just read about China yesterday? People in China are getting out of the yuan and getting other currencies, likewise cryptos, to better leverage themselves, right? Could this be coming to the United States? I don't know. It's just a question. I threw it out there. Ask it to yourself. All right. Druckenmiller said that he thinks the U.S. economy could suffer from a hard landing in the medium-term future, adding that he would be stunned if we don't have a recession in 2023. Druckenmiller chose not to mince his words as he discussed the bleak macro picture. He said that the U.S. was in deep trouble and shared an ominous warning that something really bad could happen due to the worsening state of the economy. Yes, it's not rocket science. It's literally, yes, bad things are going to happen. Yes, the economy's going to crap. Yes, there is a new system being built around us that we're probably not paying enough attention to. And yes, we're going to have to see this old system destroyed before the new one, like a phoenix, raises itself from out of the ashes. I don't know. You see the movies all the time. I don't know. I don't know where they came from. It just slipped out. I don't know. Let's move along. All right. Okay, we got an article here. It says stock market loses, wipes out $9 trillion from Americans' wealth. Woo, man, that is, woo, right? United States citizens lost $9 trillion, right? Let's see what's going on. Falling stock markets have wiped out more than $9 trillion in wealth from U.S. households, putting more pressure on family balance sheets and spending. Americans' holdings of corporate equity, I kind of hate saying that. United States citizens' holdings of corporate equities and mutual fund shares fell to $33 trillion at the end of the second quarter, down from $42 trillion at the start of the year. According to data from the Federal Reserve, with major market indexes falling even further since early July and the bond market adding further losses, market experts say the current wealth losses from financial markets could total $9.5 trillion to $10 trillion. That's actually tough numbers. That's a lot of numbers, especially when you think about the United States debt being around 20 some trillion. Well, here, United States citizens, the wealthiest United States citizens, have lost 10 trillion alone in assets from the stock market. Let's just play that back one more time. So we keep hearing that the United States is $23 trillion in debt. And everybody's like, oh my God, it's the worst thing, you know what I'm saying? It's over for us. We're gonna fail as a country because of that debt. But it's like literally United States citizens are holding an amassed amount of around 10 trillion that they've lost. Does it make any sense? Yeah, think about it. I don't know. Think about it. I don't know. It's just a question. All right. Economists say the drops could soon start rippling through the economy, adding pressure to United States citizens' balance sheets and possibly hurting spending, borrowing, and investing. Mark Zandi, chief economist of Moody's Analytics, said the losses could reduce real gross domestic product growth by nearly 0.2 percentage points over the coming year. And I'm sure that's possible. I mean, we haven't seen anything yet because, as a whole, the United States is working on chewing itself up and spitting itself out. And I mean, wow, you know, something to think about. I mean, you're talking about a loss of around 10 trillion stock market is what, the rich citizens are going through. I guess it's a lot, but then again, it probably isn't a lot, especially when you start to think about the actual amount of asset value and wealth in the United States. So when you actually look at that number, you know what I'm saying, usdebtclock.org, 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 I believe it is usdebtclock.org. When you look there and you start seeing the actual amount of wealth and assets in this country, this country, the United States, and you see that and you start thinking about this century, it doesn't really seem like that much when you see the real numbers. But I mean, it still lets us know that that stock market is taking a beating, and it's taking a beating because companies are taking a beating. And companies are taking a beating from some things going on in the background we might want to tune into. But, I don't know. All right, it says the loss of stock wealth suffered to date, if sustained, will be a small but meaningful headwind to consumer spending and economic growth in coming months, Zandi said. The wealthy are bearing the largest losses since they own an outsized share of stocks. The top 10% of United States citizens have lost over $8 trillion in stock market wealth this year, which marks a 22% decline in their stock wealth. According to the Federal Reserve, the top 1% has lost over $5 trillion in stock market wealth. The bottom 50% have lost about $70 billion in stocks. So, the other 50%, there's 50% of the bottom, yeah, they've lost about 70 billion. When we start looking at the real upper class citizens, you know what I'm saying? It's like, I mean, you know, I don't know, man. Y'all think about that. I'm just sharing the article. You know, personal opinions, thoughts, and ideas. I get it. I understand. But when we look at this and then we look at that debt clock, it's a lot more to think about and comprehend and understand. But the main point is the stock market's taking a beating. You know what I'm saying? So maybe if you're involved in that, pay a little more attention. Let's start thinking back to what's going on in the economy as a whole. Let's think about the fact that we are suffering from an inflated dollar. And so at some point, the dollar has to show its true value because it really doesn't have a value. And it's pretty much backed by United States debt. And so those contracts, so those secured bonds are what's giving the dollar value. And it's like, what good is that if you can't pay those debts? So, then it's like at that point, is the actual US dollar worthless? And what are we talking about? So then that kind of puts us in a situation like the Chinese. It's like, well, with all the fear, should I get into digital currencies? Well, it's like, oh, well, digital currencies, you know what I'm saying? They're backed by currencies all over the world, okay? Currencies all over the world are involved in the cryptocurrency space. So if you're having a problem in your country, it's irrelevant because the people over there, the other country that are not having a problem, they're using their currency, and their currency is being swapped out for these other currencies, and that's giving the other currencies, these cryptocurrencies, these digital currencies, their value. You know what I'm saying? And plus their use. If it has a strong use and people have to pay to use it, and then they're going to pay that high amount, which then is increasing wealth and value as well, which is another long-winded story because I can get long-winded talking about this stuff. But I'm gonna close there. That's what I got today for the news, and I hope you all enjoyed it. If you got value, please hit that like button, hit the thumbs up, get subscribed to the channel, and share this video with family, friends, and loved ones who you think could also use this information. I will catch you all in the next episode.